All right, today is Monday, October 12th. This is the end of the day review. Kind of an interesting day in the live trading room today. We saw pretty much a non-stop upward bias trend, and that trend started at, what was it, 10:40 this
10:40.
morning. Yeah, and it ran until
15:05.
15:05. Thanks, Aaron. So there's the detailed performance of the trades today. What was interesting is Michael and Aaron and I were just chatting, and they were sharing that despite the fact that we were in a long running trend, and I don't think we have anybody in our community that would just hold for the entire trend. There were lots of opportunities based on the adaptive entry system signals to get in and back out again. So between 10:40 and 15:05, there were quite a few opportunities to lock in profits. So the overall performance today for the two categories that we track in our personal trading plan, 9:30 to noon, all signals, and 7 to 4, trend bias and trend continuation, at 18.25 points the morning, 9:30 to noon, and at 39 points, 7 to 4. Our optimum category, now this is a category that we pay attention to, but we don't translate it into a personal trading plan. But our optimum category, trading all signals, 7 to 4, it's up 80.75 points. That's a really strong day. So we're going to go ahead and take the performance of the two categories that we use to track and just profile for you the personal trading plan. 18.25 points, and remember, each point is worth $20 per contract on NQ. We're trading the NASDAQ 100 futures, and we did 10 trades today. And then 39 points, and we did 13 trades. All right, so I'm going to pull up the personal trading plan. We're going to start with our 9:30 to noon category. So today is Monday the 12th, and we did 18.25 points, so 18.25 times $20 a point per contract. And then we're trading 3 contracts. So we did $1,095 of profit today, and 10 trades, 3 contracts per trade, 30 contracts. And then we're going to plug in our other information also, and then we'll just do a quick evaluation of both. We did 39 points, and that's at $20 a point times 3 contracts. Our trading plan has scaled us up to 3 contracts, so $2,340 today, and 13 trades, 3 contracts per trade, 39 contracts. All right, so let's just do a couple comparisons here. We're talking about one category where we have a large number of people in our community who like to trade for an extended day, and that would be the 7 to 4 category. Now, they don't necessarily trade those specific hours, but within that range, we can actually help them identify what is likely, what is probable for them to be able to harvest as profits. So if we were to trade from 7 to 4, we now have 14.2 weeks under our belt. We've had 16 losing days in those 14.2 weeks. And so when I factor in the loss frequency relative to the number of weeks, and then take a look at all of the winning days and all the losing days, our winning day average is 33.36 points. Our losing day average is 25.35 points. So that's what our run rate is for the first 14.2 weeks of a 52-week plan. So I'm going to put that information in here, 0.36 and minus 25.35. And the reason I put that information in here is because these values are being used to project going forward for the balance of our 52 weeks. For the first 14.2 weeks, this has been our average, and we want the rest of our 52 weeks forecast to be based on that same average run rate. That way, what we know is that whatever we've done to date, big winning days, losing trades, big losing days, frequency of losses, everything that has transpired to date. If we replicate that going forward, then we will have a reasonable forecast based on actual performance and actual results. So if we limit our exposure, our margin risk exposure to no more than 3 contracts, then our income forecast or potential income forecast is $331,685, and that's having started with $5,000 in the account. So it's a really pretty simple process at the end of your trading day to plug in your actual performance and show what you made or lost for the day, show the number of contracts that you traded for the day, and then come up here and just evaluate where you are in terms of your losing days versus number of weeks. And of course, by default, the balance is winning days, but it's a little easier to show losing days only because we hope to have a minimum number of losing days. And then those factors combined with all the winning days and those factors combined with all the losing days are going to calculate your run rate. And so therefore, we're able to project forward the balance of our 52 weeks, and combined with what's under our belt and that future forecast, we have a reasonable expectation, a reasonable, but not a guarantee, a reasonable expectation of this level of income. Now let's jump to our other category. The results here should be very different because we're only trading 9:30 to noon. And if we have issues, if we have losing trades earlier in the day, we don't have as much time in the day to recover. Also, if we had nice winning trades, as we can frequently have before 9:30, we don't have the advantage of those in our numbers. But this is the reality. Some people have time to trade 9:30 to noon. They don't have any other time outside of those hours. Some people might trade 8 to 10. Some people might trade 9 to 11:30. We can help you understand what you could reasonably expect. The purpose of this personal trading plan isn't to channel you specifically into these timeframes. It's to show you how to use the plan for whatever your personal trading results will be. All right, so we've plugged our numbers in. Now in this category, we have 25 losing days in that same 14.2 weeks. So we've got quite a few more losing days, but how does that affect us? Do we still have a reasonable income? Well, let's make sure that we have our forecast going forward designed correctly. So based on the frequency of losing days relative to the number of weeks and the average of our winning days and the average of our losing days, we're going to take the winning day average of 22.32 and plug it into our forecast. And we're going to take the average losing day of minus 37.81. We're going to plug it into our losing day forecast. Now, I think that this is very realistic. One of my thoughts when we designed this personal trading plan was we wanted to make sure that we incorporated some factor for losing days, losing trades, etc., because it is a reality of trading. And it's one of the things that can really set a trader off and kind of discourage them if they have a day or two of losses, partly because they don't really have any perspective as to where to fit those losses in to what they've been doing. They don't really keep track of their detail. What we are doing is we're keeping track of our detail, trade by trade, and I'm going to show you some averages here in just a minute, but then we plug it into our personal trading plan so that at the close of each trading day, once we've done our work to plug it into our trading plan, we have a reasonable idea of what our income potential could be, even though we might have a higher frequency of losses than what we really would have desired. Or maybe today was a losing day for us, or maybe we had 2 back-to-back losing days, or maybe we just didn't produce the types of results that we wanted today. Whatever it is, traders can frequently tell themselves a very negative story about what's going on. And if you put it in the context of the personal trading plan, you can frequently find yourself letting go of all that emotional baggage and say, listen, if I continue to operate the way I have for the first 14.2 weeks, if I were to lose another 25 days over the next 14.2 weeks, And if my average run rate was 22.32 for winning days and 37.81 for losing days, and if I never scaled beyond more than 3 contracts in my personal trading plan, the potential income over the course of 12 months, having started with just $5,000 in the account, is $155,268. I think that's pretty outstanding. So if you find yourself telling yourself a story about, well, I wanted fewer losing days, and I thought maybe I would have had fewer losing days, or I didn't expect to have, last week 2 back-to-back losses. You can start to get very discouraged. The personal trading plan not only is a financial forecast, it's an emotional management tool that I believe will help you manage your way through the ups and downs of trading, just like any small business. You're going to have days that you walk away feeling really good, really positive about yourself, and you're going to have days that you walk away not feeling quite so good. This is an emotional management tool as well as a financial forecast tool, and that's the way we look at it. Now, one last thing I want to show you here is the number of contracts will scale based on the balance of the account, and that's all driven by no more than 10% of the balance of the account will be allocated to contracts, and then you can provide a limiter on top of that. So if you decided that you wanted to amp up your game a little bit, you could always increase the number of contracts to 4 contracts. And all of a sudden your income is potentially going to be $195,000. All of the 14.2 weeks behind us isn't going to change when you adjust that four contract max, but it will change the contracts going forward. You can set this at whatever you desire. You can make it 10 contracts. You won't get to 10 contracts in the trading plan until the balance of the account is such that a margin requirement for those 10 contracts is no more than 10% of the balance of the account. We think that 3 contracts is a very conservative approach. It's a great way for you to learn. I think that going from 5,000 to potentially 155,000 over the course of 12 months is a very strong stride for anybody. And again, there's no guarantee that that's what you're going to achieve. What could influence it from here forward to the end of your 52-week period is what are your average run rates. If they significantly improve, more positive, then this potential income may actually be bigger. If they decline, you may still have a very strong income potential having started with $5,000, but it might be less than what you see here. So whatever it is, it's really important that you plug in your numbers at the close of every day and just devote a few minutes of your time and attention to understanding where you are and how you feel about your forecast, and come back to the trading day ready to continue to do the same thing or continue to learn so that perhaps you can actually improve your results if you choose to. One last thing I want to share with you here is the averages for the categories that we're keeping track of. The trend bias and continuation trades, which is the 7 to 4 category, overall for the last 85 trading days, is $618 a day. That's based on 1 contract of the NASDAQ 100, $618 a day. I think that's pretty strong right there. The 9 to noon category, 9:30 to noon, sorry, all signals is averaging $350 a day for the last 85 trading days. That's really strong, and that's on a per contract basis. If you're somebody who wants to trade 5 contracts, want to trade 10 contracts, you're feeling confident, your personal trading plan has scaled you up to a bigger contract number, obviously you can multiply these numbers by whatever the quantity of contracts is that you're choosing to trade. The optimum category, the most well-balanced performing category, which we don't have into a personal trading plan, but we're keeping a close eye on it, is taking all signals from 7 to 4. This is 7 to 4 Eastern. For the last 85 trading days is averaging $1,306 a day, $1,300 a day. And again, that's based on 1 contract. If you want a multiple of 5 or 10 or 2 or whatever you choose, it's that number multiplied times your number of contracts. So this category has the lowest frequency of negative days. We've had 9 losing days and 85 trading days. We've had, well, it has the highest point rank, and in terms of win-loss ratio, it's nestled right in there with most of the other solid performing categories. The one number that you might see that is bigger than that is down here. It's not actually in our stacked rank. This is a research category where we could actually see, well, what if I took all of the signals from 7 to 4 and then added fractals to it? So Aaron created this great research design in this tool so that we can actually have the answer to that. And in the last 85 days, that's averaging just over $1,600 a day, 8 losing days out of 85 trading days. So this is a variable that we can change. We could say, what if you wanted to trade only from 8 in the morning? This is, again, Eastern time, to you've got just enough time to trade until, say, 10:30. I can tell you that based on our detailed tracking of all of the performance of the adaptive entry system for the last 85 days, trading from 8 to 10:30 is averaging $451 a day, and that's no guarantee of that going forward. That is what the historical average is, but it gives you a foundation for understanding if you only have a certain amount of time to trade, what could you possibly produce? Say, well, it's based on our history, it's not unlikely that you could be somewhere around, say, $400 a day. And if that is something that meets your goals, that's something that gets you excited, $400 a day per contract, then that might be something that you want to consider. So that is the summary for today, and we're pretty excited about what we're doing. We're nicely on pace with both of the personal trading plan forecasts. Good numbers, in my opinion, based on having started with $5,000. So we will be back at 8:45 in the morning, and hope you all have a nice rest of your day.